Mapping out the price chart, a trading tutorial module. Here we will demonstrate how we find levels of significance based on the following methodology. 1. Fixed volume profiles. 2. Support and resistance levels. 3. Using VWAP/AVWAP indicator. 4. Using Fibonacci. 5. Liquidity levels. Ideally using heat maps, 6 at times, applying standard moving averages.
In this exercise, we're going to go through the charts, and in this case, Bitcoin, map our key levels, pivot points based on a number of methodologies, basically looking at support and resistance lines, looking at a fixed volume profile, using the VWAP and Fibonacci. We're going to map it up and look for areas of confluence and try to figure out what is likely to be a good trade and see the lessons learned. Here we go. This is a weekly chart. Let's put in our level. Here's a weekly template. And what I'll do is I'll copy and paste. I'm using the magnet over here to the body of the candles. I'm mapping this area particularly because, as you can see, price is currently active there. If you look closely, my methodology, in such cases like that, where it was previous, it's been tapped, I just put a dotted line there, or a dashed line, whatever feels right, just to isolate it from the current ones here. So this is historical, which is the dotted, and the current ones, which are thick. All right, so what we're doing, you can see we have a weekly level there, ever so slight. And now we're seeing that we are approaching the weekly, and it's likely to be resistant for the short term anyway. Let's do the ones on the bottom. So that was a weekly level there. Another weekly level down there. And you can see that these weekly levels were tapped, and we also have the CME gap in there as well. Now we can fix this up. These are all weeklies. What I want to do is make this a higher time frame candle levels. Just using my methodology. And what we do is completely label them. That should help us with the weeklies. Now we're going to the monthly. Get our line again. That's our monthly level. That's going to be likely a major resistance. So what we're going to do is get our template, monthly level. You can see the previous monthly level. So what we're doing is we're going to make it dotted. And so on. And you can see we're pretty much close to the monthly level here as well. Okay. Yes, you can do all the others as well if you're interested. Just leave it there for now. And let's label these as appropriately. And you will notice that my monthly level doesn't have weekly lines in it, because I made the weekly lines based on the template not visible, so we don't get it mixed up. So you'll start to get the feel for my methodology as well. And now what we're going to do is go back to, now what I like to do is the free day. The free day type sort of helps us out. It gives an average, because usually what happens is at times you get the daily level and just pulls back quickly. But at times when it consolidates, it takes about 2 or 3 days for it to drop. And that's what I like the free day one. So, and I'll label it accordingly as well. So here I'll label it as a daily, and then just put the free there in front of it. Free day level, you can see how much confluence it has with some of the levels. And I'm just going to map the ones that are relevant right now for price, because historically it's already been done. And you can see how this is taking form. And I'll just keep doing that. And then we're going to go to the daily one and see if there's any. What we'll do is with the daily one, it's more interested in current trading setup. So what we want to do is looking for trades with the dailies as part of the makeup. So what we do is now we go to the daily. And now you can see historical levels playing a key role. Monthly was there, and you can see that here we got the resistance on the weekly, significant, and so I'm expecting the monthly here to be a resistance. But it's also, let's have a look at the daily. There is the daily ones as well. So short term, daily is there. So that's going to be an important level. And what I want to do is, I won't mix it up with the higher time frames. So this daily is going to be just daily. And you notice my different colors. Here's a daily. And the more confidence we have, so that was a daily level here. And that is a daily level there, which sort of maps the 3-day one, doesn't it? So what we can do is combine it afterwards and get rid of some of it. So that's our daily. That's our daily in the past. What we'll do is make it dashed. And you can say this is daily in the past as well, give or take. And there we go. Now we can go to a smaller time frame and see what's happening. There we go. So 4-hour, we've gone above this particular area. And you can see these levels. What we now can do is map some liquidity. So this liquidity up there, that's a liquidity spot. What I want to do is just map these up first. That's our daily levels, right? This is my liquidity. So what I'll do is it hasn't been tapped. So that's our liquidity. That could be over here, actually. So the stops were coming out. This liquidity, this area took those out before it went down. Now this is not going to be as important. Don't think so. What's going to be important is that one there. You can probably even, because it took a while. There's a few shorts there, so it could be there as well. What I want to do is just spread this out a bit. The crossing over. What we need to do is get the magnet back in there. Let's put the liquidity. That wasn't tapped. That wasn't tapped. And definitely this wasn't tapped either. This one's going to have a bit of an impact. And that's pretty much actually this last one here. This is our liquidity there, right? So we want to map these out. There we go. So we mapped it out. Now we've got something to go with. We can do Fibonacci. Let's do a few things now. We'll use fixed volume here because price is ranging around here. So what we'll do is just see what it gives us. Value area high, value area low, and point of control. So this is point of control right there. And what we want to do is make it red. Right there, right. What we want to do is the next level. So that was a squeeze. And you can see how this comes about. Value area low was a target there. This was a value area low there. And we just continue on. We want to look at the macro as well, from there to there, and see what it gives us. Okay. Value area low matches pretty much the monthly. And we've got a value area high. we've got the top, we've got this level, and we've got the big picture. We don't need these now because they sort of nullify each other when price goes down or swings. What we want to do is, right, get that VWAP. VWAP is pretty important. So let's see what VWAP from the top gives us. Right, we'll stick with that. Leave that there. We'll get this pivot point, see what that gives us. All right, so this is likely to be a strong resistance. We're on the daily. We might get past the daily, but this is where we're looking at to be a major resistance. Let's do us from the bottom. Doesn't give us anything of relevance now. That was giving it to us. So if I was to do another one here, won't give much. Yep. So what's this one? This is a 4-hour one. All right. What we want to do is the VWAP from the bottom of here. Okay, so we can see that's going to be a strong resistance with that area as well. We found the bottom value area low as a major resistance there. So we can start seeing our key levels of interest, and areas basically what to short. So price is coming. We're going to look from a smaller time frame, but if price comes here, we are looking to short, potentially short. We're going to look for a failed auction or a swing value pattern of some sort on smaller time frame. Could be just a scalp trade or a major day move. But definitely this level here, as price comes, so if this was to take out the liquidity from here, we expect a strong resistance here. However, we can always consolidate around here before it goes up again. So that is going to be a bullish scenario. And yes, we'll enter it because it could just pull back really hard and it's worth it. We haven't added the Fibonacci yet, so let's just do that for a sec. Going ahead of ourselves, let's just do this Fibonacci now. And the good thing now, what we can do is just hide these, hide them all. So we just have a clean sheet. All right, there we go. Where's the last one? Okay, we'll leave that there. What we have is from the top. Let's see what it gives us to the bottom. The 0.5 Fibonacci was probably the resistance. We can play that, give or take a bit. Let's just reverse this. Now you see the confluence, don't you? Let's look at, so we are regular. All right. Let's just do this, forgot that. Add these bottom ones, see what it does. Yeah, it's close enough. You can see that, bigger picture. Now what we want to do is look at the pivot points from there to there. So reverse that. Okay, so that can be a major resistance as well. So we're using the pivot points. This can be resistance. And that's it. Now we're going to look for trading opportunities. We're going to look for types of candles on the 4-hour for these type of levels to be rejection candles. And then if you get a bearish candle, that's pretty much looking to short. Right now, we can say that this level here, the value area low, is a major target as well. So what we say is, I'll call it TPOs. And that's what we got. So if we add other stuff, liquidity, yep, dailies, and that's a daily level there as well. So which one's that one? I should go there. And we have these ones here. Okay, that's it.
There you have it. Please give Sam a like, share, and subscribe to his channel to support him for doing more of these posts.